JB here. Hope everybody's doing outstanding. April 10th, 2024. We have about 45 minutes to the close here. And CPI day, and certainly didn't disappoint. I'll talk quick about that. I'll talk about the moves in some of the names I'm in. DELL, some of the pot names I added. Well, it's not cannabis, excuse me. Also talk a little bit about some names that have caught my eye. And some of it's because of what's been brought to the attention in the chat room. The CAVA group, right? Looks strong, relative strength today. Nice upgrade this morning. Sorry about that, folks. Those two names, and then, we have Stars earnings tomorrow morning. Stars not giving Constellation Group. I think Stars, STZ is the ticker. Constellation Group, they report earnings tomorrow morning. Bullish piece out by Goldman Sachs yesterday, and then today, Wedbush, just before, reiterated their outperform rating with a $300 price target. I think it's going to be a beat and raise. The question is going to be whether it's going to be a big enough beat and raise for the stock to really take off. So I'll talk about that too. Go from there. Let's see here first. Okay, so first, the CPI data. So we had that big move last Thursday when the Fed speak came out, and the Fed speakers pretty much ratcheted back their expectations for cutting rates. One of the Fed speakers in Minnesota said possibility of no rate cuts this year. So kind of freaked the markets out. It almost was like a snowball effect as the comments kept coming. Then eventually broke down in the afternoon. Big sell-off into the close. Then we had the jobs report, and the jobs report came in stronger than expected, which I thought would have caused more downward pressure. It did not, which led me to believe that the CPI number would be of huge importance, and it was. I guess silver lining I put on the watch list is that it was only a tenth of a percent above expectations. It wasn't a severe, big upside surprise. The issue is that's back-to-back months of higher than expected inflation, month-over-month increases. So kind of takes away some of the ammo for the Fed to cut rates in June, which was kind of diminishing anyway. And then you have to look to July's meeting. So we'll have to see how that all plays out. I still think we get at least 2 rate cuts. The other silver lining, I think it's like the economy is doing so well, even with rates being so high and being high for a long period of time, that once they do start cutting rates, you have to think the economy is going to get even stronger. So I think that's some of the reason why the market's not selling off as much as as I thought it would. It held its back above that 512.50 area on the SPY. So I think we hold here, we can get constructive. We have some earnings on Friday. The Q1 earnings season kicks off. So maybe we chop around today. Hopefully a little follow through tomorrow, 517 or so. And then work our way back up. 518.50 was the next support on the upside. So if we support resistance, so if we get up there, break through, I think I would be a little more optimistic heading into weekend if we kind of hold the ground here. Don't hit more lows and hold the 512.50. So that's the overall markets. Constellation Brands I was just talking about. I was hoping for an opportunity. Typically when I get calls into earnings on a binary event, I want to be able to grab the calls at the start of the week if I do weeklies, and be able to lock some of the premiums in on the way up so that I can sell some and hold the rest for earnings. So that takes out the risk, right? If I can hold some freebies, Constellation Brands didn't give me that opportunity. The stock, it was melting higher than yesterday, a rough session, and then today it's actually in the green, but not enough for the calls, and they're hurting. But I'll continue to hold those strikes. I'm not going to salvage and then watch the stock go up to 285, 290 tomorrow. But I'm bullish the name. If it does have a good report, strong report, and it looks like maybe it does head up near 290, 300 in the coming weeks, I may look to add some more strikes tomorrow morning. So that's Constellation Brands. DELL, I had some questions yesterday and again today. I put it on the watch list. So DELL was great last week, and I've said probably about 3 different times on the rants about DELL dropping to that 115 handle last Tuesday, held the calls, and then 2 days later it's at 136. Made some nice money on the DELL strikes last week. Locked the rest of the Aprils in, which are still in the green. I checked them before. The 130s are, I think they're $1.30 or so. And then I rolled out to the May strikes with some of the profits. So I'm holding with the profits. So that's why I add the strikes on. So it takes the risk out, right? If those go bidless by the time the May expiration comes, I'll still have made money on DELL. But my thought process there was I thought it's going to 150. I have plenty of time to ride the ups and downs, and DELL has been volatile, right? All the way up to 136 on Thursday, down to 127, then down to 123 on Friday, back up, closed at 130 and change, or 133 or something. So I still think the story, it's a great story. I think there's going to be more FOMO in the future, and I think it heads to 150. It'll probably happen very quickly. So at some point, for how I've traded over the years, I rarely ever average down on a position. I'd rather, if the position goes against me, I'd rather get lower strikes. So I might possibly add some 155 strikes. Those are pretty much, actually might be a little lower than where I got the 165s. If I see an opportunity, maybe tomorrow or Friday, if it maybe it's heading 128, 129, I'll look to add some more strikes on DELL. But for now, it's been so volatile, it's tough. We could have a sell-off tomorrow overnight. We can open 1% down on the S&P, and DELL could be at 118, 117. I hope that's not going to be the case, but it's certainly a possibility. And you look at the chart, it's still bullish. I think if it finds a bottom here, you can make the case for higher lows, higher highs and higher lows. So 120, we got up to 135, down to 110, I think it hit, up to 136, now down to 120, and now I would guess my next thing is before it gets in the next week or two, it's going to be 140. So that's the thought process there in DELL. It's painful to ride them, to hold on some of these swings, but at the same token, you get an upgrade tomorrow, it could open at 130. So I don't want to be in a situation where I'm not holding a position on DELL because I don't think the story's changed, and I think it warrants a higher valuation based on what's going on, their back orders, their recent earnings, so on and so forth. So that's that. ACB CGC, I put that on the watch list this morning. Tilray reported their earnings. I did on my rant yesterday. They've gotten into to beer distribution there, IPAs, the whole. I don't even know what a percentage of revenue it accounts for Tilray, but they disappointed a little bit, and there was a sympathy move in the cannabis name. CGC and ACB sold off. I don't really see the reason why, but they're very sensitive, and they also have these wild swings. So this morning, even with the market selling off, both the names reverse course. ACB was up over almost 11%, and at times it was up for the week. Let's see what it is now. So ACB is up. Still up 3% for the week, and that's despite all these swings. I don't want to miss out the next move because the premiums keep going up on the calls for ACB. So I went and finally got some June strikes on ACB because I think it's heading into double digits, and you start looking back, and I think it heads to at least over 11, 12 in the coming weeks, if not higher. So that's kind of why I added those strikes, because I don't want to see it go back up to 8, 9, and then just continue to take off, and then I miss my opportunity to get the June strikes. And then at some point, I'll lock the rest of my $7 strikes, which expire next week, and go from there. Similar with CGC, still have some of the 10s, which expire next week. I'll lock the rest of those in at some point, and just continue to hold the maze. And then at some point, I'll look for higher strikes on CGC, because I think it's headed 17, 18. On the flip side here, you take a look at IIPR, and I mentioned this a couple times in the chat room this morning. Seems like rising rates are putting a panic in the REITs again. So they're a highly sensitive, I wouldn't call it an instrument, but the REITs pay dividends, and when yields go up, it's not as attractive. So you see SRS was up over 8%. Yeah, it's close to almost 8%, because SRS is made up of like 85% are REITs, and then it has Simon Property Group in it, is EQIX. But IIPR is a REIT, so unfortunately it's getting taken down with the rest of the names down 3%. Maybe an opportunity. I'll probably just wait. My strikes don't expire till next week, so maybe I'll wait a couple days to see if it finds footing. But the story hasn't changed with IIPR. I think it heads at least over 110 in the coming weeks. And the disappointing part, it rallied 5 straight days, but very small gains, and then today wiped out all those gains. So disappointing to say the least. So that's IIPR, ACB, CGC. SE Limited. So, I said it yesterday with the gaming with NetEase. Again this morning, market's selling off, and there's SE going higher. All of a sudden, boom, it's at 58.47. I still think it heads to $60, but it seems like every time it moves higher in the morning, it fades those gains and closes slightly green or flat, but still in an uptrend. So it's off. Was it off 4 cents? But if it closes green today, that's 1, 2, 3, 4, 5 straight sessions to the upside, and that's 60 handles right in reach. The good thing is I was able to close out some of my calls to cover costs for over 100% when it went up into the 58s. So now I'm riding risk-free, and then if it starts to head towards 60, I'll look for some higher strikes. I can go on a rant for a while about SE, but I won't. But I still think it's a great story, and heads higher from here. I'm not going to talk too much about CDLX. Still looking for the May strikes, which will encompass earnings. Stock was over 15 yesterday, all the way down to 13 this morning. But the small caps were taken on a chin. I think they were down over 3% in the pre-market. So they've recouped some of those. Where are we at? Only down 2.6%. So I think a lot of those, some of the small cap names are getting hit just as a sympathy move with the rest of the small caps. So that's CDLX. And then OX, similar story. Thankfully, I mean, it went all the way. Let's see here. I didn't even know what it opened at. Did it open? Oh, it opened at like 10.60. All the way down to $10, right at the 10 o'clock hour. Has been chopping around back to 10 around 3 o'clock. And starting to bounce. Not much to do here. Maybe it does need a catalyst. They announced news yesterday. That moved the stock a little bit, but then it gave gains back. So I'll just continue to hold those calls. Intuitive Surgical. So I wouldn't say disappointing, but it seems like every time it looks like it's going to go, it was almost green, 391 and change, and then it sells off down to 387.50 again to the 3 o'clock hour, and now it's back up here near 390. I really thought that it was going to head over 400 either yesterday, today, hopefully tomorrow. They were put on the Bank of America US 1 focus list, which they did the same thing for Spotify, and when they announced that they were on the US 1 list, Spotify gapped up 5% or ran up 5% that morning. I didn't think there was going to be deja vu here on Intuitive Surgical, but I thought at least it would put a bid in the stock. Obviously, the overall market's not helping right now. So hopefully we get a little green tomorrow or a little push into the close and then green tomorrow, and that can start heading near 400. Not much ahead here on Riley. I'm not going to talk too much about that one, but it is, it's off here. Hindsight, should I've added those April 35s? I don't know. Still riding the freebie 30s. I still think it's going to squeeze. They came out with the short interest update yesterday. It's only 100,000 shares recovered, but it's a lagging indicator because the NASDAQ requires they give you have to. Each issuer has to report it to the NASDAQ, I think 3 days after settlement, and then it takes them 10 days to process. So by the time you get the short interest data, the real short interest data from the NASDAQ, it's 10 sessions old. But I still think it paints a picture of shorts still holding on to their shares, sold short. Well, I mean, I'm sure there's naked shorts too, so I don't even want to get into that conversation. But I think all it's going to take is one little kick in the butt, and the thing's going to really start to take off. I forgot to talk about it at the start of my rant, but with the markets, the triple-headed monster, it's doing exactly what it did back in the fall, right? I mean, the yields are higher, the dollar's soaring, and then we have oil. Those three things happened back in the fall. Don't want to see those three things continue to happen, because then I think things we're going to get a little dicey here. So on the downside, 512.50, and then that 504 handle on the SPY. If that 504 handle breaks, I'll be, not that I'll salvage all my call positions and go full bear mode, but I'll certainly be scaling to more put positions, more hedges. The ones I was looking at this morning, and I put that on the watch as possible, hedges. Avago, it was 1,300 pre-market, and then in a matter of 5 to 10 minutes after the open, was back up at 1,330. So tough to play puts on that for a hedge position. And then MDB, actually, I could have tried to do a hedge on that. It opened at about 352 all the way up to almost 360, and now it's sitting here at 352. So the premiums on the puts might be up a little bit, but it's a Wednesday, so premiums tend to erode more on weeklies on a Wednesday than any of the other days in the week. Well, besides Thursday and Friday, but that's when the erosion really starts to kick in. I think that's my rant. Two other names, the CAVA, right? I've never been in one, and I remember back in the day, I was never into Chipotle before I started trading Chipotle. I'm not saying it's going to be a similar story here. It's going to go up to, $3,000. Its difference is valuation. It trades 10 times revenue. So does CMG. It does have a decent short interest too. I think it's like 12 or 13%. I have to do more digging, but it had an upgrade this morning, and you can see the stock is just relative. Despite what's going on with the market, it looks like it's trading on a different exchange today, just very strong. So certainly a name, especially you take a look at the chart. It's coming off a pullback, so maybe this heads back over 70 in the coming days. So this looks nice. And not only that, it held the 50-day moving average. So good signs nonetheless. And then the other one is DNUT, right? So Tim's has posted, I don't know if JDS had posted as well. They announced a partnership with McDonald's. It gives them exposure to that they wouldn't already have. And this reminds me of, I don't even know, 7-Elevens across the country. I know they're on the Northeast. But 7-Eleven has a deal or had a deal with Dunkin' Donuts. I think they had it with Krispy Kreme. So you go into Dunkin', you get your coffee, and there's the little display with all the Dunkin' Donuts. So I'm not sitting there saying that was a big boon to their business, but not only does it give you advertising exposure, people get exposed to your product, but also incremental sales. Supposedly, that deal with McDonald's increases their exposure 175%. I don't know who, one of the analysts pointed out, I don't know how they come up with that math, but definitely, what is this? Hang on a second, it's totally silly. Oh, so definitely, interesting setup. And it's another highly shorted name. People, when they look at Krispy Kreme, they don't think it's a growth story, what have you, but this might return to growth. If it does, it hit $18 after that news. Maybe it gets over 18 in the coming weeks. So don't be surprised if you see me add some May strikes on that name. I'm trying to think of some of the other names, CDLX, NNOX. Yeah, that's about it. VIX is right here. I mean, surprising enough, the VIX was higher on Friday? Or no, Thursday. No. I'm trying to think. It was higher on Monday than it was today, right? Is that what or yesterday maybe? Yesterday at the lows, that's right. So when the market sold off yesterday morning at 10:30, the VIX was higher yesterday morning, despite the S&P being higher than it is today. So I don't know. Take that with a grain of salt. Maybe that means folks were positioned yesterday for today. I don't know. But I mean, we're sitting here on nearly at 16 on VIX, which historically speaking, the VIX, if you average it all out, the VIX would average a 20. So we're still in not volatile times per se, although today feels somewhat volatile. Yeah, crazy stuff, right? So the VIX was higher Monday and yesterday. So I don't know if that means there's more pain coming. I don't know, but I'm still optimistic as long as we hold 512.50. Hopefully there's no shenanigans with the last 27 minutes here. Clean close. I almost prefer like a somewhat small red day open, and then we can bounce, because it seems like if we have gains, it always reverses the gains and goes red. Whereas if we get a weaker open, then we can have the buyers come in, and a nice green close tomorrow will be phenomenal. So that's it, folks. Let's have a great day. Rock and roll.